I'm not sure if there's anyone out there that actually doesn't know who Ray Dalio is, but for anyone that doesn't know who Ray Dalio is, well, he's the founder of Bridgewater Associates. And for anyone who doesn't know who or what Bridgewater Associates is, well, it's the world's largest hedge fund firm. Ray Dalio is one of the smartest investors of our time, and he's an investor that is not a fan of bonds. In fact, Dalio says that investing in bonds is, well, it's stupid. So, for lack of a better term, Dalio thinks that bonds are stupid, and he thinks that investing in them is stupid. So, pull up a seat and get your notebook and maybe an ink pen out, because you're going to need to take notes. We're going to be talking about Ray Dalio. We're going to talk about what he thinks, what he predicts, and what you need to know in order not to lose money in the stock market. So, stick around. You're going to want to hear this, and we're going to be starting right now. Hey, what's going on? It's Pat from Top Ticker Trades. If you're new here and you want to learn how to use stocks and options to make your portfolio go parabolic, make sure you start now by subscribing and tapping that bell so you never miss an upload. What is going on, ladies and gentlemen? Welcome back to the channel. Welcome back to yet another video. So listen, we've got some very important and serious stuff to actually talk about today, and I always try to stay at least a few steps ahead, and I always try to keep you a few steps ahead as well. So that being said, when someone like Ray Dalio gives us a warning, it's time for me to listen and then share the message with those closest to me, and that of course would be you guys. And I want to get right into it, ladies and gentlemen, but before I do, I want to ask you for a very small favor. Could you please go ahead and smash that like button for me? Because it really does help out the channel, and I really need you guys to do it so that this YouTube algorithm will share this video with, well, as many people as possible. But enough of that, let us go ahead and get started. Hey, I'm about to take the trash out. Can you give me all that trash that's in your wallet, please? I don't have to, make 2 trips later, you lazy ass.
What are you talking about?
Well, tomorrow is trash day, and they usually pick up the trash in the morning, so I thought that maybe tonight I could, take it out.
Yeah, I'm aware of when they take the trash, but why are you saying there's trash in my wallet?
I'm not saying that,
So I just made all that up? You just asked me for the trash in my wallet.
I apologize. How presumptive of me. I just thought that maybe you got your stimmy?
My stimulus check?
Yeah, is that what you millennials call it these days?
What is a bi-millennial?
Well, never mind that. Did you cash your stimulus check?
Well, yeah, I did.
So then you're saying that your wallet, it's full of cash right now?
So what if it is? You gonna rob me or something?
Rob you for your trash? Please.
Jump into what you jump off the train. And the issue is you can't jump into cash. Cash is trash, okay? Cash is that they're going to, because they're going to print money.
All right, ladies and gentlemen, so yes, I am aware it's kind of an older clip. It's not that old, but it is about, 14 months old. That's a year and a couple of months. And Dalio, back then, way back then, was talking about the Fed or our government printing money. Now, yes, he did predict this, but was it really that hard of a prediction? Was it pretty obvious? Well, we're going to get into all that in just a second. But either way, Ray Dalio said some other things very recently that kind of scare me, and they should scare you too, because he's usually dead on with his predictions, okay? And we're going to dissect all this. We're going to dissect what this man has been saying, and then we're going to come up with an interpretation. This is going to be a lot of fun. This is kind of like those English or literature classes where you get to do some literary analysis, except now we're going to do it with Ray Dalio and what he's talking about. We're going to apply it to the stock market. We're going to apply it to our financial situation. Do you have too much money in stocks? Do you have too much money in bonds? Well, we're going to take a look at all that. We're going to see where your portfolio is at. We're going to do a portfolio check. And then we're going to see where your portfolio should be at. According to what Ray Dalio is saying, we're going to compare your portfolio to his portfolio for these types of situations. For inflation, we're going to look at other asset classes that he's mentioned recently, and we're going to see and try to find out if it would make sense for you to put some of your money into those other asset classes, assuming that there are other asset classes that he's sprinkling his wealth into. So let's take a very quick look. Dalio says that you have to have a well-diversified portfolio. That's rule number one. You have to be global, you have to have balance, and you have to have a certain amount of gold in your portfolio, or you have to have something that's hard. Now, Dalio says that there are three monetary systems that happen. So first, it had intrinsic value. This is from the old days where you had to have gold coins. Then later, we advanced and came up with the idea of banks, or even central banks. So what these banks do is create certificates that we now call notes. These notes are nothing more than a claim on those things. But the problem with those notes is that we print many more certificates than there's actually money in the bank. That's a linked system. And we broke that in 1971, and we finally moved to a fiat monetary system, which means that you can essentially print whatever amount of money that you want, which unfortunately it seems that the government is doing. So now it seems that we are actually in that cycle. So I'm gonna let you listen to what Ray Dalio says that you need to do and how to beat this inflation. And what's interesting about this is that it sounds very similar to what somebody else that's actually very important to us, or at least to me, has been saying for the longest. I'm not going to tell you who it is. Well, actually, of course, I'm going to tell you who it is. I'm just not going to tell you who it is right now because I want to see if any of you will actually catch on. And if you do, make sure to leave it in the comments below before you continue on with this video. You can pause it, tell me in the comments who you think it is that I'm talking about, and then continue watching the video. But don't cheat.
There is also new technologies that are coming out. There's inventiveness and innovation. Right. Innovation comes from good thinking. The capacity to supplement using artificial intelligence. We talked about. So I think we can make the pie bigger. The issue is how you divide the pie, and also how monetization is a threat. So there are good things here. I mean, basically, almost if you oversimplify a portfolio, you probably want the stock in the technology disrupting companies and some gold. I mean, because it's the new technology revolution in relationship also to the monetization question, I think.
So I want to point out a few of the things that Dalio says here. He talks about new tech that's coming out. He's talking about innovation and how innovation comes from good thinking. He also mentions AI a little bit. And I just want you to kind of make a mental note of those things because we're going to touch up on those in a second. But about the portfolio that you keep during these type of times, he says, basically, if you oversimplify a portfolio, you probably want a stock in the technology disrupting companies and some gold because it's the new technology revolution and relationship also to the monetization question. So now I want to kind of revisit what he said about the new tech and innovation. I find it particularly interesting that while he's talking about gold, which is pretty much a universal hedge against inflation, he also talks about this disruptive innovation. Now, the reason that I find this interesting, and remember earlier when I told you guys to pause the video, and I basically wanted to see if you guys knew who Ray Dalio reminds me of with the stuff that he's saying. So what I'm going to do now is play you a clip here, and I ask that you are open-minded as you listen to it And after this clip, I'm pretty much going to come and explain the reference, or at least how I perceive it, in relation to what Dalio is saying.
And it is a complaint relative to other blockchains that involve contracts that are instantaneously settled. It's the most secure network, and one reason is that 10 minutes. And if the cost is, I don't know, $10, and I'm not quite sure what the cost is, but compared to the cost to transfer $1 million through traditional financial systems, no, there is no comparison. So our confidence in Bitcoin and the Bitcoin blockchain has continued to grow over the years, as I think we've stated very often.
Okay, so I guess the cat's out of the bag. For anybody that doesn't know, that was our dear old Aunt Cathie Wood from ARK Invest. Now, what she's talking about there is transferring money using Bitcoin and blockchain technology versus transferring funds through traditional financial systems. And specifically, she's talking about the cost of transferring money, and pretty much says, or I guess she doesn't pretty much say it, she does say, that there is no comparison between transferring through Bitcoin's blockchain and the traditional financial systems, meaning that it's a lot cheaper to do it through the Bitcoin blockchain, and it's the most secure method. So before I share my outlook, let me quickly explain. This isn't exactly what I had in mind when I made the comparison between Dalio's outlook earlier and the unidentified party that, well, we now know to be Aunt Cathie, but we're going to look at statements made by Aunt Cathie that directly and clearly align with what Dalio says, and in fact, she even makes reference to Dalio in one of the clips that we're going to be watching in just a second. But here's my take on the clip that we just watched. If you'll recall, Dalio tells us to be well diversified, and he also tells us to be diversified among different asset classes. He tells us that we want to be in the tech stock that's doing the disrupting, and also to hold a little bit of gold. Now, I know Bitcoin is not a stock per se, but Dalio, it's actually unknown whether he had Bitcoin or even the blockchain on his mind when he said these things. So probably not very likely that he did. But there are newer interviews out which suggest that he does accept the fact that Bitcoin should be in every portfolio to some degree. Also, if we listen to how Aunt Cathie describes Bitcoin, and from what we know about her investments, it is clear that our dear Aunt Cathie views Bitcoin as a disruptive technology that she fully supports and does believe that it will play a major role in changing the world as we know it today. Cathie Wood is all about innovation and investing in innovative and disruptive technology. Also, keep in mind that Bitcoin is known as digital gold because it is scarce. There is a limited number of Bitcoin out there, and it cannot be printed or printed at will like fiat currency. So what else do we actually know about Bitcoin? Well, we do know that our government is now heavily investing into coming up with a digital currency. But it's not just our government. This is happening all over the world, or at least for the most part.
Throughout the world is going to ignite inflation. Well, we believe that point of view is going to be in a dueling match with the two deflationary forces. One is good deflation and one is bad deflation. So the good deflation has to do with technologically enabled innovation. It is deflationary by nature. It rides down cost curves, gains efficiency, gains productivity. And as we've told you before, in the electric vehicle space, for example, that deflation rate is 28% for every cumulative doubling in the number of units produced. and we're only at 2.2 million units of EVs right now. So think about that, 28% for every cumulative, and it's not going to take long to double that 2.2 million units. And in the DNA sequencing space, it's 40% for every cumulative doubling. And we're at a very low base there as well. But those low bases are going to move up pretty quickly. We think electric vehicle sales will move from 2.2 million to 40 million, almost a 20-fold increase in the next 5 years. But they're at a low base right now, and they will begin to impact economic statistics as they scale during the next few years. In the meantime,
so in that clip, our Aunt Cathie describes two deflationary forces, one of them being good and the other one being bad. Now in this specific clip, she mostly just talks about the good one, or describes the good one, which again has to do with disruptive innovation. And my belief here is that Ray Dalio, and it's not known whether or not they believe in the same actual industries or if they agree on anything. But it is my belief that the reason that Ray Dalio is telling us to be invested in the tech stock that's disruptive or disrupting the industry out there is for the reasons that are mentioned here by our Aunt Cathie. She kind of describes how she believes, or how the ARK Invest team believes, that this will all happen and how this will change pretty much the world as we know it. But there's one last clip that I gotta play for you guys, and this is the clip where she describes the bad forces of deflation, and this is where she also mentions Ray Dalio.
what's going to happen? This disruptive innovation is going to cause creative destruction in the traditional world order. And it's not just electric vehicles and DNA sequencing, it's robotics, artificial intelligence, blockchain technology. There is so much innovation taking place right now. And I don't think that investors appreciate how these S-curves are feeding one another as these innovations converge. The best example of that, we believe, will be autonomous taxi networks, the convergence of robots. Autonomous vehicles are robots. Energy storage, they will be electric. That's going to be the cheapest form of transportation. And artificial intelligence. Those three S-curves converging. We were talking about this at our brainstorm today, and I was trying to say, how can we capture this so people really understand it? You know, this time. So that's the good deflation, powerful deflationary forces. The bad deflation is associated with what I just mentioned. These the disintermediation and disruption to the traditional world order is going to put a lot of companies at risk. Now, companies who thought they were steady eddies, you know, and nothing really would ever change, whether it's in the financial services sector or the auto and auto-related sector, maybe the rail sector, almost any company associated with the internal combustion engine and suppliers around. I mean, this is a massive part. These are massive parts of the economy. Many of those companies have, because of shareholder, maybe the short-sightedness of shareholders, have adopted short-term time horizons themselves and catered to these shareholders. They have consistently leveraged up to buy back their shares and pay dividends. Now, we're seeing the result in formerly blue chip stocks. GE is one, IBM is another. There are going to be many more of these. Many are highly leveraged because they didn't understand how quickly the world was going to evolve. In fact, their time horizon wasn't 5 or 10 years. It was 2 years, or until the end of the CEO's term. What's going to happen now, we believe, is they are going to be forced to cut prices in order to service their debt. And so that's the bad deflation. And this is the deflation that Ray Dalio, Jeff Gundlach, and Howard Marks have focused investors on, and we believe that's right. So two forces of deflation, and then we have this question about money and how will it cause inflation. I don't know. And I would say these two deflationary forces are pretty powerful in the short term. They're going to cause a lot of confusion. And you've heard me use the word velocity before. I know it's somewhat esoteric. All it means is the rate at which money turns over. If there's a lot of confusion, especially in the traditional world order, the velocity of money will continue to fall. The reason that the monetary easing globally during the 2008 and 2009 meltdown and afterwards, the reason it never ignited inflation was this velocity. The money went up, but the rate at which it turned over per year in the economy slowed down as people held back. They were risk averse, concerned about their futures, concerned about their company's futures. I think that probably will continue as these dueling deflationary forces, good and bad, duel with not duel with one another, actually are on the right side or the same side and against all of the monetary ease.
So now, knowing everything that we know from what we've heard here, what do you think Ray Dalio wants in his portfolio? Well, what he wants, ideally, he looks for what is a good storehold of wealth, somewhere where he can place his money, which won't lose value. So Dalio looks for the stable storeholds in the form of stocks and other kinds of debt. He wants those that have strong balance sheets, stable incomes, and basically he's wanting to have assets that will perform well in any kind of environment, and he looks at them based on how cheap or expensive they are. So taking a look at Ray Dalio's portfolio, it looks like he is very well diversified and has stocks in every sector pretty much. He's also holding some major ETFs and a bunch of international companies, mainly from China though. So you guys can feel free to pause this and check out his entire portfolio and do a little bit of digging into these and see which ones you like. And let me know in the comments below if you are going to consider getting into any of these, or let me know how you plan to diversify your portfolio and what you thought about this video. And before you guys take off, if this video helped you in any manner, I ask that you please hit that like button because it greatly helps out this channel. And if you haven't subscribed yet, what are you waiting for? You can join our growing family just by hitting that subscribe button, but don't forget to tap that bell so you're notified every time I drop a video. We have a growing community here of the nicest and most knowledgeable people, and I really enjoy talking with you guys in the comments section. Don't wait any longer, hit that subscribe button, smash that like button for me, and I will see you guys in the next video. While I have you here, I wanted to quickly tell you about the brand new First Trade app, available for mobile or PC. The platform will give you access to powerful and easy to use tools and allows you to trade with less restrictions, zero commissions, zero fees, and you can use the first link in the description below to download a free stock today without having to deposit any money. This will greatly help out the channel and is always appreciated. And now back to your regularly scheduled programming. Congrats, ladies and gentlemen, you've made it to the end of the video. If you like what you watched, make sure you subscribe because I put out videos just like this one every single day. And please do me a favor and smash that like button if I helped you in any way, because it really goes a long way in helping the channel out and keeps me motivated to make videos every single day. Now, there's a lot of work involved, a lot of research, and a lot of time and effort into editing and putting these out daily for you guys. You can subscribe from your screen right now, or if you want to watch one of my other videos, I'm sure YouTube has some good content picked out for you on the left-hand side of your screen now. Thanks for sticking it out with me till the end, and I will see you guys in the next video.